everyone, welcome to Finance, and in this video we're going to talk about risk reward, or also known as risk return trade-off. Now, this chart is very important in terms of trying to achieve optimum return for our portfolio, and at the same time it would also give us an idea on how to detect fraud or illegal investment schemes. So later on, I will show you why and how. So first, if we are going to plot yung different asset classes sa chart, we have money market dito sa bottom, we have bonds sa gitna, and we have equities. So we have here for money market, for example, low risk, low returns. For bonds, that's going to be medium risks, medium returns, and for equities, that's going to be the most risky asset. And then, of course, you will be rewarded because of the risk that you have sa equities. So, pag in-expand mo yung category ng each asset class, you would have this one. For example, if you plot a slope, yung time deposit nasa baba, and then as you embrace higher risks, pataas ng pataas din yung return. So from time deposit, you move up to treasury bills, and then you have commercial papers. So these are actually short-term debt instruments. And then you move up to government securities. You have corporate bonds and preferred ETFs or exchange traded funds. So meron tayong video nitong ETF. We have the first Metro ETF. If you have not watched that video, please watch that para at least meron kayong idea about ETFs. And then REIT, we also have a video on this about our first REIT in the Philippines. We have the Ayala REIT. And of course, the last one we have common stocks. Okay, so yan yung parang hierarchy ng risks across asset classes and the corresponding level of returns. Okay. So ano ba yung mga risks sa sa money market? Now we have a few, pero dito ang i-enumerate natin yung let's say top 3 or 5 na very much applicable to them. So first we have liquidity risks. So ano yung liquidity risks? The investment's inability to be converted to immediate cash. Now unlike regular ATM mo, passbook or savings, pag nag-withdraw ka, you can exactly have the money right away, di ba? Less than an hour. Now, liquidity risks, ito yung hindi mo agad mawi-withdraw yung pera mo. Hindi mo siya agad-agad mahahawakan. For example, yung mga money market funds natin, they require at least one banking day before mo makuha yung cash. So kung nag-withdraw ka na or nag-redeem ka ngayon, makukuha mo yung pera mo the next banking day pa. No, pag time deposits or treasury bills, they really require longer period of time. For example, 30 days, 90 days, 180 days. And you have to wait for that specific, tenor to mature. Otherwise, kung kukunin mo siya na hindi pa nag-mature, you will be penalized. Okay? So interest rate risk, the risk of capital loss due to the upward changes in interest rate. Meron tayong video nito explaining the yield curve and yung sa inverse relationship ng bond prices and interest rate. So again, kung hindi nyo pa napanood yung video, you have to watch that in order for you to really understand the concept of, the yield curve and the movements of interest rates pagdating sa returns ng money market and bonds or fixed income investments. Counterparty risks, the risk due to conflict of interest or insolvency of its counterparty. So if yung mga counterparties ng fund would fail to deliver their services, for example, yung custodian bank or yung, let's say, investment house, trust company, broker, and so on and so forth, if they fail to deliver their service, then you will encounter counterparty risks. So ito yung parang top 3 for the money market. Okay. Now, if you move to bonds, so syempre, bonds can offer higher potential return than money market, but the lists of risks in the bonds market would include the previous risks ng money market, okay? Etong liquidity, interest rate risk, and counterparty, plus another bunch of risks. So to start with, meron tayong market risks. the risk caused by market and economic factors that affect the performance of the fund. So meron tayong video nito about sa economy and the financial market. So yung mga economic data kasi natin like OFW, remittances, or GDP, we have trade, export, and import. They really affect the sentiment of the both the market, investment, the industry. So merong interaction nun that can really affect the performance of the fund. And those are actually summarized as market risks. Credit risk. Now, this is very particular pagdating sa bonds and money market. Okay, not really applicable pagdating sa stocks because bonds and money market are considered as debt instruments. So, utang siya. So, kung merong utang, merong risk doon na hindi makakabayad yung nangutang or yung debtor. So, you will encounter credit risks pagdating sa money market and bonds investments. Okay, non-payment of principal by the borrower or issuing company. Reinvestment risk, it's actually the likelihood that the investment will earn lesser income when you reinvest. Now, since yung performance ng funds would vary, for example, in economic factors and other risks, so yung returns mo, for example, so first time ka na nag-invest and then nag-harvest ka ng gains. And then the next time you reinvest, it would not mean that you would get the same yield or return kung ano yung nakuha mo before. It could be higher, it could be lower. Okay, again, because of the interaction of the various risks kung saang asset class ka naka-invest. Now let's move to stocks. Okay, the same risk na nasa money market, na nasa bonds, and when you bring them to stocks or equities, you will have again another bunch of risks. So dito, merong equity price risk. Now, since common and preferred, particularly common stocks, are highly exposed to, sentiment, daily sentiment of the market. We have economic indicators, news. We have company news released every day. So that would affect the sentiment of the market. And thus, the prices of equities or stocks in the market really varies from time to time. I mean, intraday, like every minute, every hour, they change rapidly. So yun yung equity price risk. Country risk. Now, since the stock market or the Philippine Stock Exchange Index is our barometer for investment, let's say confidence in the country, pag merong mga, let's say, geopolitical risk, regulations and uncertainties, let's say yung South China Sea, South China Sea issues. We also have yung mga human rights, what they call this one, news cases, issues about the Philippines, and so on and so forth. Yung mga instability ng political setup or economic setup natin, they really can affect the sentiment of both domestic and foreign investors. So those are an example, or those are examples of country risks. Foreign exchange risk. Now, if you're holding money market, bonds, and equities that are, foreign currency denominated, let's say dollar, euro, you will experience or encounter this type of risk. Now, the risk that Forex changes and can affect the performance of the fund. So again, if you're holding dollar, kung mataas yung palitan, you can expect also that the fund would perform better. Pero kung, let's say, mababa yung palitan ng dollar peso, and that would inversely affect, of course, your investment. So yun yung sa foreign exchange risk. Now, going back again, dito summarize natin. Let's say if your money market can give you 2 to 3% per year, bonds can give you 5, 10, and then equities move to a 15, 20% bracket. Now, it's simply because you actually, get to have higher risk pagdating dito. So yung independent mo, variable is risk, and your return, the level of your returns would actually depend on the level of risk that you embrace. So, eto yung rule of thumb sa investment. Now, perhaps walang mag-offer ng investment dito, no? So, you have low return and then high risk, of course, that's not an investment at all. But this one here, now I call this one red zone. Okay, this is very attractive. You know why? If you're going to look at the risk level, that's very, very low, minimal. But if you're going to look at the return, it's, it's very much attractive, the same level, or it could be higher than equities market. Okay, now these are potential. Now, I'm not saying that it's absolutely a scam or fraud, but it's an alarm for you that it could be an investment scam, a Ponzi, or pyramid scheme. So you have to be careful with that, because it should follow the rule of thumb that low risk, low return, medium risk, medium return, higher risk, higher return. Now this one is actually offering low risk but high return. So you have to be careful. Now, how to check, how to verify, confirm that this business model or investment options are actually good? You can jump to sec.gov.ph. So here you can just go to home, and then we have investors education. Now these are advisories. Okay, so if you have some companies here that if you have some uh, news na narinig nyo, pwedeng nyo siyang i-check dito. And if you really want to look at the lists of investment, scam, you can go directly to this link, and dun makikita mo yung mga listings. So again, hindi ibig sabihin na illegal or talagang fraud ito. It's an alarm. It's a potential. So kailangan mo lang siyang i-confirm. But of course, if yung nag-offer sa iyo ng investment, they can show you the business papers, approval from BSP SEC, that they really operate in this manner. Then if they can offer that level of return, their business model is really good, diba? Their business model is really good. So yun yung discussion natin for this video. It's all about the risk reward trade-off, and perhaps how to use that one in identifying potential scam or illegal investment schemes. So as always, thank you very much for watching, and see you next time.